Don't forget, you can reach the latest episode of Potomac Watch anytime. Just ask your smart speaker, play the Opinion Potomac Watch podcast.
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome back. Another potential taste of the future is a story in the Journal this week about a New York State deal with Tesla. The headline is New York State built Elon Musk $1 billion factory. It was a bad deal. And it goes through this deal cut by then Governor Andrew Cuomo. Apparently, New York paid to build a quarter-mile long facility with 1.2 million square feet of industrial space. It is now being leased to Tesla for $1 a year. A lot of the equipment, solar panel manufacturing equipment that was purchased has apparently been resold or scrapped. And there are some Tesla employees in there, but a lot of them are low-level desk workers not doing the manufacturing that was promised. And so, Kim, I think that's a great example. I understand why these kinds of deals are exciting for politicians, because they get to go out and proclaim what a great job they've done for this area of their state with a depressed economy, and they get the big scissors and they cut the red ribbon. And when the bill actually comes due, when the results are in, remember this was Andrew Cuomo that cut that deal. He is long gone. But after seeing stories like this over and over and over again, the thing that I'm perplexed by, Kim, is why voters keep letting them get away with this.
I know. This is give an example of just how poorly this has panned out. As you know, this was done in 2015, this deal. That's when they had a construction ceremony for it. And Musk had promised at the time that by 2020, this Buffalo plant would every week be churning out enough solar panel shingles to cover 1,000 roofs. Well, we now know about what that rate is. It's averaging about 21 installations a week, according to some analysts who reviewed the data. We meanwhile had a state comptroller audit of this project that found just 54 cents of economic benefit for every subsidy dollar spent on the factory. And there's been a lot of other disappointments surrounding this as well, too. One of the promises was that if you reinvigorated this plant and got this going, that lots of other businesses would come by and move in, and you'd, really give a boost to the whole area. That hasn't happened as well. And I am with you, Kyle. We see even Republican governors constantly sending out these subsidies, cutting special deals with specific companies, giving them special tax breaks to come in, sometimes because they're interested in simply juicing their economy or getting more, jobs in their economy. Although sometimes, as in the case with this Cuomo, because they have some ideological ambition, solar panels. Either way, it never works. And it is mind-boggling to me. Even like I said, Republican states go down this road of picking winners and losers. They have a great track record of picking losers instead of focusing their efforts on things that would benefit all of their populations and any company that would choose to come and work in their state, such as lower regulations, lower overall tax rates, better quality of living for those to encourage more people and workers to come to their states. That's the path to prosperity. You've seen some states do that better than others. Florida's been pretty good at this. You've seen migration, but it's nonetheless is just something that's too tempting to every politician, and conservative governors and legislatures really ought to come under more heat to just knock it off.
Well, I guess I do understand as he starts running for re-election why President Biden is trying to tout Bidenomics as his economic record, because he's going to be judged on it in November of 2024. And let's turn now to the jobs report, the latest jobs report we've gotten today. It shows U.S. employers in June added 209,000 workers on net. That is down somewhat from the revised figure for a month earlier of 306,000. So the Journal's news story, Alicia, suggests that this means the Federal Reserve will probably be on track later this month to raise interest rates again. But the other side of this equation is always wages. And when the Journal's editorials ran those numbers late last month, they said that average hourly earnings are still down about 3.2% in real terms across the 29 months of President Biden's tenure. And so, Alicia, Alicia, we're still in a situation where the economy is looking okay, but a little bit precarious. And I get it. If you're in the White House running for re-election, you got to be worried about that as you head into 2024.
Right. So job growth is expected to slow right now. It's probably averaging about the same pace it did in 2019. I think everyone has been a little surprised by how strong it has been earlier this year. And to your point, the reason why people are actually feeling pretty lousy about this economy and why Biden's polling numbers on economics are so bad is really because of the real wages have declined under him. And that's because of inflation. And the Fed still has a little ways to go to get it under control. This preferred index last week basically showed that the core inflation hasn't really budged in the last 6 months or so. Gas prices have fallen, energy prices are falling, food prices have fallen. I went into the Trader Joe's the other day and eggs are back down to $1.50, which is where they were pre-pandemic. And, that felt pretty good. And I think that has actually boosted consumer confidence, just seeing food and energy prices fall down. And that's probably actually providing a little bit more fuel to the economy, where you're seeing it has a little more legs. As now real incomes are starting to grow again as wages outpace the inflation. That's exactly the reason why a lot of the analysts are expecting the Fed to have to raise their interest rates again this year by another 25 to 50 points, is because they still see the economy is continuing to chug along despite its previous increases. And they really haven't brought down inflation to its 2% target. And yes, everyone says, well, it's long and variable lags. That is true. But again, I think everyone's already pricing in the 25 to 50 basis point increase because the economy actually has been showing a lot of strength. You saw it again in the JOLTS, the job openings numbers that ticked up again in May, along with the quits rate. So a lot of people are also, including me, are a little perplexed about what's going on with the economy. There's a lot of noise. We'll get a little more information from the GDP report later this year. But I think there's still a lot of anticipation that we could be headed to a recession early next year, which is not great timing for President Biden.
One last thing, we don't want to close today without mentioning that this marks 100 days of unjustified detention in Russia for our colleague Evan Gershkovich, who is still in prison on false espionage charges for no other reason than that he is an American journalist. The Wall Street Journal and the U.S. government have reiterated that this is a bogus allegation, have called for Evan's release, and until that happens, our thoughts will continue to be with Evan and his family. Thank you, Alicia and Kim. Thank you all for listening. You can email us at pwpodcast@wsj.com. If you like the show, please hit that subscribe button, and we'll be back next week with another edition of Potomac Watch.